Three, two, one. And I feel like I should do a Tonight Show golf swing to introduce you. But John, Jay, welcome to the Assignment of Benefits podcast.
Thank you.
Good to be
Glad to
here.
be here.
Thank you.
Yeah. So before we jump in, we're going to be talking about Citizens Insurance. It's Citizens of Florida, the insurance company that exists in Florida. Before we jump into that particular topic, John and Jay, I want to give you guys an opportunity to do a little bit of a little elevator pitch on who you are and what is it that you do. So, Jay, why don't we start with you? Jay Adams, who are you? What is it that you do?
Uh, thank, Thanks, Nick. So currently I'm with Citizens Property Insurance Company. I'm the Chief Insurance Officer, and I pretty much am running all the operations for claims and underwriting. And included in that umbrella is all litigation and, of course, catastrophe. And those two pieces make up, a pretty significant portion of what I do. I've been in the business probably close to 35 years. I worked for a private carrier in multiple states, doing a lot of the same types of stuff.
Yep. Jay, your background, is it accounting or actuarial?
No, it's all underwriting and claims, actually.
Okay. Okay, perfect. John
Yeah.
Kummer, who are you? What do you do?
Hey, I'm with Team Focus Insurance Group, and we provide software and backroom services to insurance companies in all over the United States. My background by trade, I'm a CPA, technically a CPA. Out of college, worked for a CPA firm for 8 years, and then became the chief examiner at the state of Florida in the Department of Insurance at that time, before it was the Office of Insurance Regulation. And ultimately ended up being the deputy insurance commissioner. And I was there during Andrew, which was a unique experience. And subsequently went on to help form one of the original takeout companies from what was then the FRPC JUA. And then started a company called Better Insurance Processing Technology, which is now part of Team Focus. So.
Yeah, marvelous. Thank you. Jay, I think it would be helpful to level set. I don't want to say anyone that doesn't know anything about Citizens might have their head in the ground around this, but it's probably important to level set what Citizens is, what it does, what its mandate is, just so the audience is well aware. Citizens is an insurance company, but they're not the typical insurance company. Can you give a little bit of background on what Citizens is?
Sure. So Citizens was set up to be the insurer of last resort. And a lot of people think that kind of relates to an assigned risk carrier or somebody that has to write every risk that's in the state. It's not really what Citizens' mission is. Our mission is to provide insurance coverage for those that can otherwise not obtain it from the private market or from an affordability perspective. And the reality of how I believe it operates is we're really a barometer for the market. And what I mean by that is when times are good, there's plenty of capital, it's affordable, reinsurance is affordable, and there's capacity available. Then the private carriers will come to Citizens, take business out, and then they will kind of ride that profit wave. Then when the opposite occurs, that capital is very tough, maybe there's been lots of storms and things like that, there's pressure on reinsurance and the capital market shrinks for Citizens, Citizens grows pretty significantly. So over the course of its history, we've been as small as about 440,000 policies, and we've been as big as about 1.5 million policies. And right now, the market is improving pretty significantly. We've seen 9 new entrants this year. And at the end of the day, Citizens went from about 1.4 million policies, and we're down to right around 907,000 policies. We anticipate next year, we could maybe even come in below
Mm,
that. So, there is positive sign that the markets are coming back. But that's really what Citizens is really here to do, in my opinion. And we fluctuate 100% according to what's going on in the market.
yeah. So I think it's if you look up Citizens on any sort of website, it'll say the insurer of last resort. I
Right.
think I think we're going to have a conversation around what the insurer of last resort really means, especially in the state of Florida, because I think citizens or the process of putting insurance into citizens, I think has been abused over the prior decade, where it's not
Right.
necessarily insurer of last resort, and there's some political reasons around that. But before we get to that, John, why does a state need an insurer of last resort? You mentioned you were there during Andrew. Andrew precipitated the formation of the citizens precursor around that. But there are now 30 something states that have this insurer of last resort. Why does the state of Florida need an insurer of last resort?
Sure. Almost every state has some sort of residual market or insurance company of last resort for automobile type policies, where you have bad drivers that no insurance company wants to take on. Most states do have a market that they provide for that. Uh, the homeowners type market, residential property type market, didn't come around until Andrew. In 92, when Andrew came, we weren't worried about catastrophe exposure in the state of Florida. It had been decades since there had been a significant hurricane. The losses were easily manageable, and then along came Andrew, and we had major insurance companies insolvent. We had the CEOs of large national insurance companies coming in saying our subsidiaries that write business in Florida are insolvent. We're going to make them good by capital donations from the parents, but we're not going to be writing any new business. We also had several of the smaller carriers become insolvent and unable to pay claims. They didn't have a parent that would make the capital infusions. So, Florida statutes require that an insolvent company can't write any new business and has to cancel its existing policies. So we had nowhere to put those policies in the state of Florida. So we had to create the Florida Residential Property and Casualty Joint Underwriting Association to take those risks in. And that was the precursor to Citizens, where Citizens was formed later from the FRPC JOA as a more, if you will, comprehensive type solution, an improved solution to what needed to be. But you need the residual market because there are risks that due to catastrophe exposure or other underwriting concerns that the regular open market will not insure. And obviously you need to be able to provide insurance to keep your economy robust and moving.
Yeah. John, just so the audience understands, because I'm going to go to Jay with like how Citizens is traditionally different, but a JUA has a particular structure to it. It's usually not itself an insurance company, but like a conglomeration of a bunch of insurers, and should the spaghetti hit the fan, so to speak, around that, it gets those losses will get allocated based off of some sort of proportional calculation.
Yeah,
That initial JUA, can you just talk about the structure of it and like who was participating in it and what were some of the responsibilities of that? Because I think a lot of our audience may not understand that the insurer of last resort, like a JUA, isn't always technically an insurance company.
yeah. There's two basic types of JUAs, if you will. One is what I'd call an assigned risk plan, where they will, when a policy comes in, they will assign it to an open market company in the state. And so they just get assigned that risk and they have to take that risk and make it part of their portfolio. The other type of JUA is where it actually operates as an insurance company, which is how the JUA, the FRPC JUA, and as Jay will talk about, is also basically how Citizens functions, where they actually take the risk, charge a hopefully adequate premium to insure that risk, and then provide mechanisms to be able to pay any claims that happen from a catastrophe through reinsurance, catastrophe bonds, or in Florida, the ability to assess all other policyholders an amount for any type of a deficit that JUA may encounter.
Yeah. So Jay, Citizens is the latter, and
Mhm.
you guys are stuck between a rock and a hard place because you are technically an insurance company. So
Right.
there's an actuarial responsibility, there's a claims paying responsibility, but in many ways, even though your email says Citizens Insurance, you're almost like an employee of the state of Florida, kind of, sort of, so to speak. Can you
Yeah,
can you talk about
yeah,
that
no,
dynamic?
yeah. So Citizens was created via the legislature, right? We exist because of statute in the state. We are a semi-governmental entity, but we are apart and separate from the Florida government. Now, when they are looking at bonds and investments and things like that, Citizens is an asset slash liability on their balance sheet. How we kind of operate differently is we are an insurance company. We attempt to charge actuarially sound rates, but the Office of Insurance Regulation, we make a recommendation. They actually set that rate on a year by year basis for us. If we were to become financially unsound, we didn't have enough surplus to pay claims. And again, that would really require some type of catastrophic event, right? We purchase reinsurance just like other insurance carriers to protect that. But our first layer of defense is we have what we call a policyholder assessment. So all policyholders associated with Citizens, everybody that has a Citizens policy is eligible to receive a policyholder assessment. And that can be 15% of whatever their premium paying is. If we do not receive enough funds from that, as John mentioned, we do have the assessment authority to assess the entire population of Florida. So everybody that has a homeowners, automobile, motorcycle, RVs, toys, those types of things, any of those policies could potentially carry a citizen's assessment. If you look at your FIGA, the Florida Insurance Guarantee Association, you look at your insurance bill today, and if you're a Florida policyholder, you're receiving an assessment today on those policies I just mentioned. So Citizens has that ability if it was necessary.
To be clear, are there any limitations on policies that the state of that Citizens or the state of Florida couldn't go after? I mean, does it even extend into like Florida-based hospitals that have medical malpractice? Like, what is are there any boundaries to that?
Yeah, yeah, there is. So it's only property and casualty policies.
Okay, so homeowners would
So,
commercial as well.
yeah, we don't assess, like workers' comp, life insurance, any of those types of policies. It's all property and casualty. There are limitations. And to be honest with you, I don't get involved in that side of the business very often. So I don't want to misstate what they may or may not be.
Yeah, got it, got it. So Jay, you probably had a very busy fall. This recording is actually like take three, right? Because of the storms, we just kept having to push it out of respect for
Exactly.
what you guys had to do. Um,
Right.
I want to give the audience a sense of the mess that is a catastrophe event, right? You guys are extremely busy. You're doing a whole bunch of stuff, even doing uh, what do you call it? To like town hall villages, workshops, where
Right.
you're like going to the people that you think are affected, sitting your team down and basically taking first notices of loss or other claims conversations because they may not be able to reach you in some particular
Correct.
way. Can you talk about like what Citizens looks like before a catastrophe event and then how you have to scale to swell any sort of workforce so that you can actually accomplish what you're supposed to in a timely manner?
Sure. So on a non-catastrophe basis, we operate like a regular insurance company. Citizens, because we shrink and grow so rapidly in the marketplace, as I mentioned, we're down 300 and some thousand policies. So we never try to staff to the level of policies that we have in force at any given time. We always leveraged a vendor network source. So we do that for claims, we do it for underwriting. Um, and again, it's really to be able to absorb the ebb and the flow of how the business comes to us. So in our everyday lives, we have contracts with independent adjusting firms, and they handle certain causes of loss for citizens completely. We have oversight positions in leadership that help manage those firms, making sure that they're handling claims according to our best practices. When a storm event occurs, so we still are contracted with the exact same vendor base group. And we do is we put them on notice that, hey, we are anticipating so many claims from this event. Based on that, and based on the mix of business that the tier one firms get, here's what we anticipate we're going to be sending you as far as claims volume. We also have a tier two vendor group and a tier three vendor group. And we can obviously turn on any and all of those tiers at any given time to make sure that we have enough adjusters to respond. But, for example, Hurricane Debbie for citizens was insignificant in the number of claims. We had around 4,000, maybe 4,500 claims. We didn't adjust anything. We handled that claim volume in our normal workflows because that was not any significant pressure on our resourcing. Now, when we moved to Helene, which was the second landfalling storm, again, that hit almost in the exact same area of the state over in the Panhandle, but it created a lot of flood-related damage on the western Panhandle of Florida. So what we did then is we invoked our tier one and tier two vendors, and that brought online somewhere in the neighborhood of about 2,500 adjusters total, handling all of the storm claims. And then when Milton made landfall, a few weeks later, we turned on all three tiers of vendors to make sure that we didn't overwhelm any individual firm or any individual adjuster. So, and then what happens is we, citizens, employees, and staff, we stop handling some of the claims volume that we would normally have, push it out to the vendors. And then what we do is we leverage our team to provide more intense oversight, letting the contracts, the IA contracts, really handle the volume of the claims. And then we just provide the oversight to make sure that everything is, flowing and moving correctly.
Yeah. I hope the audience appreciates like the how challenging it is to be able to scale and then contract
Right.
down, and what that means for your employees, your vendor partners, the state, your ability to process this stuff. Do you have a status on this past hurricane season? I'd like to at some point go into the litigation reform, but it seems like with these two storms, Milton in particular, because it hit a more populated area than Helene, but with Milton, that you did have a big swell of numbers of claimants. How is that process through, and how can you contrast that to like Ian or Irma, where were the two other big storms over the past few years?
So Irma happened in 2017. It was the first real storms that Florida had seen in probably 10 years. I want to say we ended out somewhere 75 to 80,000 total claims with Hurricane Irma. And we had a pretty significant litigation rate. And litigation really drives a lot of the back end of these storms. So statutorily for Irma, we had 90 days to adjust the claim, and there was a 5-year statute to report your claim for Irma. We received claims all the way up to the 5-year date for brand new Irma claims, and many of those went into litigation. For Hurricane Ian, there was a 2-year statute to report your claim, and we were still under the same 90-day restriction to adjust the claim statutorily. We received probably about the same number, maybe a little less. I'm saying 65 to 67,000 claims for Ian. Ian was a very different event from Irma in that there was significant storm surge, like overwashing of homes, single-story homes. And that was not a significantly difficult storm to adjust because it was very clear if you had flood damage or you had wind damage, because we were 150 plus mile an hour winds. Then for the storms that we saw this year, Debbie will probably top out about 4,500 claims when it's all said and done. Helene, we are 17 to 18,000. And for Milton, we're up to about 57, 58,000 claims.
Mm.
And what's different this year from prior years is statutorily, we only have 60 days to adjust those claims. So that change came, I believe, in 2023. And we also have a 1 year statute. So all these claims will have to be reported on the anniversary of those storms. Beyond that, no claims will be taken.
That must change the dynamic of the stress that you're under. You have a lot more stress up front during the event, but
Yeah,
that long tail, I think, was very much some sort of incentivization to,
exactly.
threat. You got 5 years. It's like so many things can happen in 5 years, and all of a sudden the roof's leaking. 4.5 years in, it's like, oh well, that must
Correct.
be from the hurricane. That's almost like an impossibility to correlate it back. So that must
Exactly.
ease some of the overhead stress that you
Yeah,
guys have.
I would say that on average, and we've gone back and looked at all the storms Citizens has had, somewhere between 52 and 58 or 59% of all the claims volume is received in the first 14 to 21 days. And then we receive claims until the statute runs. And what ends up happening for Citizens, our scope of what's going on, once you get past 90, maybe 180 days, almost all the claims volume that comes in after that date has representation. And the
Hmm.
representation is either a public adjuster, a plaintiff attorney, or both. And those are the claims that end up resulting in lawsuits. And that is what, significantly drives the cost in the marketplace. For Citizens, a claim that goes into litigation costs 4 times more than a claim that does not go into litigation.
Apples to
So
apples.
yeah. So
Yeah.
what we do is, we try to do everything we can to prevent that. Um, we have now a new law that a notice of intent has to be filed 10 days prior to filing a lawsuit. Prior to that law, in about 60% of the lawsuits that were filed at Citizens, we had no idea that there was any dispute on the claim whatsoever at all. The representation group took the claim, waited 6 to 9 months, and then they filed the lawsuit. And that was our first notice. So today, now that we have this notice of intent process, we get involved because we are alerted that there's now a dispute. And we have dispute resolution methodologies we can use. We have arbitration, we have mediation, we have appraisal, and so forth. And we try to invoke all those processes to do everything we can to prevent the litigation.
Yeah. Thank you for that. That's a I've been on panels with you. I've heard that statistic before, and it's just astounding, right? Like how we allowed it to get so bad, but now there's a rationale for why it does. But it was very clear, Jay, that the state of Florida is on the hook. We, as three of us, three citizens of the state of Florida, ultimately, in a catastrophic event, should something poorly happen to citizens, we're all on the hook, which is why we want to keep citizens as small as possible. So I want to segue over to the takeout because I think there's a lot of misunderstanding. John, you were part of the first takeout, right? And you have a lot of expertise over your career on helping firms do the takeout. Can talk a little bit. There's a misunderstanding, guys. Like when you go online, for some reason, people think like a takeout is like free business. You get it. There's no risk that's associated. John, can you talk a little bit about like the takeout process and what it's meant to do?
Sure, the takeout process is meant to help stabilize citizens and the private marketplace in general. And it involves a company being, I mean, the company is taking on tremendous risk when they take policies out of Citizens. Citizens has a huge amount of catastrophe risk that they have to manage and deal with. And that private company that's taking that risk out has that same exposure. And so what happens there is that the company will look at the citizens' portfolio of policies and try to match that with their reinsurance program to get into what's termed kind of a probable maximum loss that they can suffer. They go through various catastrophe modeling programs, that type of thing, and determine these are risks that we can fit within our portfolio that a catastrophe event's not going to cause us to become insolvent and unable to pay claims. And so they submit those risks back to citizens and say, we would like these. Other companies may also want those same risks, of course, and Citizens has a lot of work now that they have to perform. The legislature over the years has shifted an awful lot of work from the private market to Citizens to be selecting those takeout risks. They now Citizens has to gather all the companies that want to take a particular risk, examine the premiums involved with it, that type of thing, and then assign those risks back out and allow the consumer to pick which of the takeout companies they would like. And of course, consumers can opt out of a takeout offer if the price is, I believe it's 20% more than what the Citizens price would be.
Yeah.
Right.
And unfortunately, you alluded to it a little bit earlier, and Jay probably can't say it as bluntly as I can say it, but in past administrations, the cost of insurance in Citizens has been artificially suppressed. The rates have been too low, quite frankly. The interior risk have been subsidizing coastal, and that's being now the ship is being righted somewhat in that respect. And so you're seeing that 20% now more realistically represent what the open market, what the real cost of insurance is, whereas before it was, still way under what the actual cost of insurance would be in an open market.
Yeah.
So, what happens when those risks are assumed, right away, the insurance company's on the hook for any claims that may happen on that risk once the policy is assumed out of Citizens. And then at renewal, they're issued their standard policy and it becomes a regular insurance
Yeah.
policy
Yeah.
after that point.
And John, you and I have spoken about this before, but it should be clear. We want to make clear to the audience that the takeout is not risk-free business.
Oh,
That
no.
theoretically, a company could do a takeout and in the same year have a catastrophic event which could wipe them out because they took the takeout. Like that scenario is absolutely on the table for a takeout company.
Yeah, absolutely. I mean, everybody tries to model to a 100 or 250-year type event, to say that I can suffer a 250-year catastrophic event and still maintain my solvency, my ability to pay claims. But what happens when a 500-year event comes in? That type, you always have that risk sitting there. And when that happens, all the investment is lost that the private market is put into that insurance company.
Yeah. Guess
And
guess it's not risk-free.
it is absolutely not risk-free. And uh, I wouldn't want to be the guy writing that check to invest in that insurance company, quite frankly. But people are willing to do that because of
Yeah.
because it is an open market and people
It,
are taking that risk to get a return.
it is part of the reason why I do this podcast is as a Florida citizen, but an outsider who's come in. I don't think the stakeholders of Florida truly understand how grateful we should be that any risk-taking person would come to Florida and say, "Yeah, that's a good bet. I'm going to bet on hurricane risk in the
Right.
state of Florida where they get half of the U.S. activity." Like that is a recipe if done incorrectly, like that will blow you up,
Absolutely.
so to speak. Um, I'm going to throw this question out to both of you since you both have lots of experience. Jay, you're going through this directly through your business, but John, you help a lot of firms in doing this. Um, it is a formalized approach to do the citizen takeout. So there is like, a cup of flour, some water, like you have to go through that steps, but it's not necessarily like companies can stumble in the process to do this. I'm I want to lay out for companies that might be listening to this, what some best practices might be when it comes to doing a takeout correctly But also, you have to pick the risks, and everyone, of course, wants to cherry pick them. That's not so easy to do, and the longer you take, the more likely it is that someone else is going to get those risks. How do we balance for these firms that want to go ahead, acquire a portfolio directly from Citizens? What would you both of you suggest are some best practices?
Well,
Sure.
no, go
Go
ahead,
ahead,
John.
Jay. No, go ahead.
So I would say that the process is significantly more complicated than it probably was for the first few of these that occurred back in
Yes.
2002 and so forth. And what I mean by that is the Office of Insurance Regulation, they have their hand in it now. And if a company wants to take out business, they have to apply to the office, and then the office will evaluate their financial stability. And then they will say, okay, we grant you X number of policies that you can pull from Citizens. Then they will contact us with that OIR approval. And we do about 5 or 6 of these takeouts on an annual basis. And we don't do it during the summer months because reinsurance is already purchased. And,
Yeah.
for a lot of different reasons, you don't want to get a big takeout and then have a big hurricane, right? So we get that information in. We also supply each company with an underwriting file that has all these different identifiers on it. So they're not making selections blind, right? They're not just given an address and go, do you want it or not? They have risk characteristics associated with the underwriting of that particular property. And like John says, they will pick and choose what they want. They'll run it through their hurricane model, see if they can, if those are good picks or not. They will notify Citizens. Here's a list that we would like to put into the takeout process. Then Citizens, on their behalf, sends a letter to the insured. Now, the smaller Citizens gets, the more companies are interested in the same policy. So you made the comment that, it's risky, but Citizens doesn't always have, I'll call them very favorable policies to depopulate. When we're at 1.5 million, we're writing a lot of business that is really good business that should be going to the market. The market just can't bear it at that moment in time. So anyway, I say all that to say they get to make a selection. Then Citizen engages. We send out these letters on their behalf. And John mentioned this. If the premium is offered by a takeout carrier that is within 20% of Citizens policy premium, then that customer is going to be removed from Citizens. Whether they elect to go with that takeout carrier or not, they have had a fair market offer that is under the 20% threshold, so they're no longer eligible to stay with Citizens. If more than one depop carrier is interested, so all those names are going to appear on their list, then they would work with their agent to make the determination of which one of those carriers they wanted to go with. And then on the flip side, if the premiums all exceed 20%, then what would end up happening is the insured must notify Citizens that they're still eligible to stay with us, and then we would offer a renewal. If they do not notice us and it has gone out in that takeout process, they're ineligible to receive a renewal. So it's a little tricky. The policyholder really needs to look at the mail that they get from Citizens, make sure they understand it, speaking with their agent, so they're always on top of the information we're providing.
Yeah, in a way, Jay, it sounds like the OIR in a manner trying to kind of protect the policyholder by, giving
Right.
them lots of options, has created bureaucracy that if the consumer is not attentive,
Right.
they could get swept right into this thing anyways, and that probably creates like conflict. Like, hey, I didn't, and I've seen that. I've seen like, hey, I didn't ask to
Right.
go, but they may not have been paying attention to the mail or however it was communicated to them.
Correct.
Yeah, and the legislature has imposed much more responsibilities on citizens in the
Right.
past decade or so. Jay hasn't mentioned it, but while they're adjusting all these claims, they're also having to revise their takeout plans to deal with surplus lines insurers and those type of companies that are there because of legislative changes. So
Right.
they're having to do a huge amount of work to deal with all the changes from both OIR
Yeah.
and the legislature. But it is, everybody is trying to protect the consumer in all of this.
Correct.
And
Yeah.
Without a doubt.
right, exactly. And it used to be a takeout company, first come, first serve, you got the policy. Now there's this communication that has to take place with the policyholder, with the agent
Yeah.
of selecting the carrier, notifying citizens, not, opting out, opting in. There's a huge amount of data flowing back and forth. And there's a lot of steps that have to be met along the way. And
Yeah.
so if you're new to the takeout process and haven't gone through it recently, it is much more complicated than it was a decade ago. Uh, the files that have to transfer back and forth, the selection, the information that the carrier has to provide back to citizens. They have to provide back their selection along with their premiums, those type of things that never used to have to happen. So supporting all that, meeting the deadlines. Citizens has a published schedule for each of its takeout events that you have to meet those deadlines if you want to participate. And
And
so
if you don't, is it like starting over?
yeah, you have to wait till the next one.
Right.
Okay, so that is, I think, critical for the audience to understand, especially anyone that's on the Florida insurers side that's like, have been considering this, that there's timing risk here, and there are windows of opportunity, and those windows open and close. Right. So Jay, as you said, you're not doing this during the summer. Not only do you have like the hurricane issues, but you're probably your team's also busy like fielding claims and stuff like that. Like you guys have your hands full. So there's legitimately timing risk that's associated with this. So, John, if you were advising a firm, we had this conversation and you were pretty adamant before, but I want to kind of bring this back up in case that no one listened, no one heard that, which is like you can't wait till the window opens at Citizens before you like jump in. You need to strategically plan ahead of time so that you're for one thing, you might be first in line, which is ideal, kind of thing. How would you advise a firm around managing that time frame, those time risks?
Well, I think you hit the nail on the head. It's a strategic initiative. It's not just something you can decide to do today and participate in a takeout next month. Because as Jay mentioned, you've got to go to OIR. You've got to get the authority to be able to take policies out of Citizens and the volume that you can do. And all of that's dependent on your reinsurance programs, all types of things that OIR is going to look at. And you're not sure what that timing is going to be. So,
Yeah.
you have to go well in advance. And if you're saying, I want to take a policy out in January or December or January, that process has to start many months before then. You can't be doing it today and saying, I want to take out risk next month. That's just not going to happen.
Yeah, that's it's so true. So Jay, are there any common blunders? Are there any mistakes that you make that like while like some companies just keep tripping up on like this either rule or regulation or process, and I want to help them if there's speed bumps, let's get them over it because we want to depopulate Citizens.
So we have a team dedicated to Citizens that really just works on depopulation. And anybody that is interested in doing a depop, my recommendation is reach out to Carl Rockman with Citizens. He's our agency VP, and he is the expert on all things depopulation. We do have a published schedule. The OIR has that published schedule. Um, Everything you said is accurate as far as there is a process, there is timing and stuff involved. Um, to me, that's the main thing. And again, it all starts with the office's approval. Citizens doesn't approve companies. The office does that. And sometimes we get folks that are interested in doing it and the office doesn't approve it. And, we don't have anything to do with that.
Yeah. Um, I want to segue towards the end of this, and respect your time. and talk about citizens as a good citizen. Jay, I've mentioned this to you. I think one of the unique things that I have found about citizens that's different, not only from the other insurer of last resorts, the other residual market players in the country, but just citizens as a carrier. Citizens is unusually transparent. Citizens produces a lot of content. Jay, you are constantly on stage presenting. I don't think I've seen a presentation you've given that where you have not gotten deep into citizens accounting, citizens claims. Like there's very little that
Right.
unless there's some sort of litigation or you're barred from saying it, other insurers kind of keep things close to the chest. Citizens is unusually transparent. Can you talk about that in particular? Like, is that a cultural thing at Citizens? How do you guys go about thinking of it? And then there is a wealth of resources that you guys have created that talk about your economics, your accounting, where a dollar of premium goes, where how claims are being distributed. Talk about the culture of being transparent.
So I mentioned early on that we were a semi-governmental entity for the state of Florida. And because of that, we're required to follow the sunshine guidelines and rules. And that makes us really an open book for anybody in the state. We often partner and participate during the legislative sessions. They come to us and ask for information. The Office of Insurance a lot of times asks specific things of citizens. We have a significant reporting back office, so to speak. Our infrastructure for that is phenomenal. And we are willing to share that, at anybody's request. Matter of fact, anybody can make a public records request, and that can be done through Michael Maitland at Citizens. And if that request comes through and a report exists, we share that report. So we really don't have any trade secret or any kind of information like that. Matter of fact, we've talked a lot about takeout carriers. We're willing to partner with those folks and help educate them. Um, you know, and we do that with anybody, whether it's we don't have competitors in the marketplace, but anybody in the private industry. I've engaged with quite a few folks on the claim stuff. Hey, what do you do for cat? What's the best way to handle this? Or how do you handle that? And, we are always open to trying to help anybody. And it might seem like a very nice thing for us to be doing. At the end of the day, the entire executive team at Citizen is very sensitive to a smaller citizens is a less risky citizens. So anything we can do to help educate others to take our business or to have a better business model where they have more capacity in the marketplace, all that stuff is good for Citizens as a company and these individual citizens in the state of Florida. I don't know if I mentioned, I made some notes prior to this. At Citizens, when you're a policyholder, if we get into any type of financial trouble, then there's an assessment that the citizens of Florida, excuse me, the citizens policyholders may have to engage in. And then if it gets bad enough, it goes out to all policyholders. And I think the reason that I want to even bring that up and mention it is it's a benefit for the policyholder to get out to a private carrier. Sometimes the coverage forms are better than what we provide, but they're not at risk for that 15% surcharge or the assessment's not a surcharge. So I think that, really is a differentiating factor from us from others. And then you mentioned about our transparency. Our website at citizensfla.com is very transparent. We have board materials, communications, we have financials, we have all kinds of resources out there. And again, if you're not seeing what you need, you have a question, you can reach out to Michael Maitland to do a public records request. And if that record exists, then we turn it over.
Yeah, that's marvelous. John, I'm going to finish off with you see across, I mean, you work with Citizens. You're a part of the sort of the creation, the precursor of that. You've done a bunch of takeouts. You've seen a cross section of insurer activity. and you've seen how Citizens operates. Are there lessons for traditional insurers that are not residual markets that they can learn from Citizens?
Oh,
You know,
yeah,
please.
that definitely. Citizens is, for a quasi-governmental organization, it's extremely efficient in what it does. And, you know, how Citizens is operating and the volume of policies in Citizens is a direct reflection on what the Florida open market is doing. And the open marketplace is, you want policies in the open market because the competitive nature of open market is going to do better than any governmental agency or any private individual agency can do. That market competition. It's always satisfying from my standpoint to be able to get companies to take policies out of Citizens because number one, it's healthy for the company taking that risk on because they can, blend their portfolio out and hopefully better utilize the reinsurance capacities that they have. And while it's increasing their risk, it's increasing the potential for success on the takeout. And it's always good to see policies coming out of Citizens because of what Jay mentioned. It's lessening the exposure both to the Citizens policyholder as well as to the policyholder, anywhere in Florida on what's happening. So
Yep.
it's a win-win situation, which is hard to find these days.
Yeah, yeah, and I want to thank you both for coming on, being so transparent yourselves, right, about this. But I think I think the property citizens of Florida, not the insurance company, but the actual us. Um, the more I get to learn, John, it's point well taken. The more I get to learn about Citizens, the more I get to engage with Jay and the team. It's like these guys are legit and they're doing really important work for us in this state where we're exposed to so many catastrophic stuff and sometimes self-inflicted wounds with litigation uh and things of that nature. But I want to thank both of you. I will put the key people that Jay mentioned in the show notes, link to Citizens, some of their content. But to both of you, I want to thank you so much for taking time out of your busy day to be with me.
Great.
Yeah, thank you. I appreciate it.
And
Okay.
thank you. We do. Thanks.